What's up everybody, this is Jack from Crypto49er, bringing you my knowledge in cryptocurrency. Today I want to talk about the one signal that indicates cryptocurrencies will fall more. So not exactly good news for all of you that's holding a lot of bags in cryptocurrencies, including myself. But I'm going to argue both sides to this signal so that you get a better picture of what I'm trying to explain right here. So yesterday I saw this article from Coinbase, the 4 reasons why Bitcoin price could now drop to 6K. And they use 4 different indicators to explain their position. One of this indicator I found very interesting though is this long-term chart he used right here, which actually charts out Bitcoin in a monthly time frame, which you don't see very often. And point is, it shows in here that he uses the 5 months EMA and the 10 months EMA. And right now he's showing that the 5 months EMA is crossing below the 10 months EMA. And right now we have a bearish cross right now. So, and then he mentioned that specifically that this has not happened since 2014. So let's go over the reasons to believe in the signal. The first one, as he mentioned, it has happened before and it lasted for 14 months back in September 2014. So let's go into the chart right here. And as you see, the green line is the 5 months EMA and the orange line is the 10 months EMA. And you see that even back in September, we were already in the bearish cross. As of today, October 12, 2018, this is just more prevalent. You can see it, and you can see that as the passage has opened up a little bit more, with almost a couple hundred points of difference, a 200-point difference in the EMAs. And as the author of the article pointed out, the last time this happened is in September 2014 right here. So, and it lasted all the way till November 2015, 14 months. So, and this, the reason why was mainly because of Mt. Gox, because Mt. Gox basically went bankrupt right around here in March. It took another 6 months before all the bears realized that, hey, this is not going to be good. So then they kept pushing it downwards. And then that's why we had that crypto nuclear winter, as many people described in the past. And the one thing about this monthly chart is it's because cryptocurrency, even Bitcoin itself, is relatively new. You can see the entire chart duration here. Like, I mean, Bitstamp has probably the longest in terms of trading history that you can see. It goes all the way back to like August of 2011. You only see those 2 trend lines around, let's say, June 2012. And then from that point on, the 5 months EMA has never crossed below the 10 months EMA until September 2014. So it only happened once, basically. So it only happened one other time in the past. And when it did cross, it was another 15 months, all the way to November 2015, before we recovered completely. That's reason number 1 to believe in the signal. Reason number 2, all the old top 20 altcoins already signaled months earlier. So let's go back to the chart here. So if you see Litecoin USD, this has already happened back in July. And if you go to Dash, for example, this has happened back in, well, I'll give you April, probably technically in March, but let's say April, this already happened. And then Monero, this happened again back in July. So a lot of these other altcoins, the top 20 altcoins, we're not talking about like bottom rung or even like top 100. This is the top 20 altcoins have already shown and signaled that we are in a more bearish trend here. And it could very well mean that Bitcoin is going to start that trend now. So one thing to note is that I know there are a lot of Bitcoin maximalists out there that say, hey, you know, it's like altcoins don't affect Bitcoin prices. All the altcoins can drop to 0 and Bitcoin will still be around. Okay, you can argue that all you want till the cows come home, okay? But if, let's just say, altcoins all do drop to 0, you don't think the Bitcoin prices will be affected? That's not possible. I'm guaranteeing you that the Bitcoin prices will be affected significantly if all the altcoins dropped a bunch more from where they are now. So that's the second reason why to believe in this signal. The third is, it's a little bit of a stretch, but the interest in Bitcoin is still dropping in Google Trends. So if you go back here, you go to Google Trends and you look up Bitcoin for the past 12 months. When we peaked out in around December 23rd of last year, about 100. So, and then we've been dropping from 50 to 40, and then all the way March, we dropped down to 19. As of this week here, we are currently at 8. So, and we've been at 8, 8, 9. So we really have been a very low interest period for Bitcoin. So that's horrible to say. So at this point, there's still less and less interest in Bitcoin, to the point where if there are less people investing in it, the value naturally drops, because the holders, the bag holders, a lot of people that are holding bags realize that, hey, you know what? I can sell right now and buy into something else that may actually go up sooner, even though they were losing a ton of money. They would rather gain on the opportunity cost of finding another investment vehicle that will earn them money right away, rather than keep on holding onto these bags. So I don't necessarily agree with that, but there are people that will probably be doing this as the price continue to trend downwards and as the interest continue to trend downwards. So now let me be the devil's advocate here and argue against the reasons to not believe in this signal. So the first one is pretty damn obvious, and it's the fact that past performance doesn't guarantee future results. People say that. I mean, I think all the prospectus that you get for these different investment funds, they list that somewhere in the investment marketing material, they will list this line here or something similar. And that's just a fact. So even though the chart clearly show that it happened in the past, and when it happened in the past, it lasted over a year, it doesn't mean that this is going to last over a year this time around. So we really don't know. I mean, that's just what it is. So number two, the signal isn't used for long-term market tracking. CoinDesk seems to have pulled this out of Forex markets on a much lower time frame. So what it is I don't think I've heard of anyone using these two EMAs to actually predict the long-term trend. And when you do a search on it, let's just say EMA 5 and EMA 5 and 10 crossover, so for 5 months, 10 months, the only, like, you'll see the FX, a lot of it about Forex trading. And then the other thing is that the time frame is much lower. So what they point out is the 5 and 10, they use it for the 4-hour time frame. So we're comparing 4-hour time frame to a monthly time frame. That is pretty ridiculously doesn't match up, in my opinion. So I don't know why CoinDesk pulled this out of thin air, other than the fact that I'm guessing the author is an expert of this somehow, and he thinks that this is a useful indicator, useful signal. But if he thinks so, he's probably alone in this perspective, because I just haven't found any other analysts that use this particular indicator for such a high time frame. So number three, so this one is very important, I believe, and it is the sell volume increased consecutively for 3 months in 2014, but not seeing that in 2018. So let's go back to the chart here again. You go back to 2014 right here, as you can see. So when it happened, so this is September. So, but let's even go back a month or two. You see it in August and even July. So it was consecutively going up, the sell volume that you can see in the bottom right here. Pay attention to the bottom of the chart right here, the sell volume. So on July 2014, we had 153,000 in terms of volume, in terms of overall volume, which equates to a bear candle, because overall was a lot more sellers than buyers. In August, we went from 150,000 to 300,000 in terms of the volume, and it went up. And in September, it went up again to 343,000. And all the way past that to October, it went up to like 591,000 in terms of sell volume. So going back to right now in October 2018, we have an opposite reverse situation here, where just the volume is just not happening. So we have less volume now than we did back in 2014. We started off with 239,000 back in August 2018, and then it just went down to 162,000 in September. So, and then now we're at 49,000 in terms of volume. So this tells me that this particular trend, however it's happening right now, it's a very weak signal at best. So here's the bottom line. While I'm 99% sure we're not going to hit all-time highs in 2018, and I have to say there are a couple of marketers out there that was, at least back a few months ago, back in July I would say, they're saying, oh, the bear market for Bitcoin is over, and we're going to go up to $40,000 by the end of this year in 2018. They're complete BS. I'm sure they won't be putting that up on their marketing material when we hit the end of 2018, because it's not going to happen. I'm almost 99% sure at this point that that's not going to happen. But I also don't think we're going to find new lows from the 5,900, 5,800 even, that we saw back in August of this year. But if we see sell volume rise for the next few months, watch out. I mean, again, so right now, the volume overall is going down, but if it goes up between November and December, you know what? Definitely watch out. So that's my video for today, guys. Let me know what you guys think. Leave a comment down below. Like and subscribe. If it isn't crypto, it isn't worth mining, it isn't worth speculating. Peace out.